Wall Street stocks ended at their lowest levels in about 2 weeks on Friday, after Texas and Florida were forced to backtrack on reopening their economies as coronavirus cases increased further and a record number of new cases were reported in the US. That exacerbated worries that the US economic recovery would be derailed. So how did stock benchmarks perform? The S&P 500 fell by 2.4% on Friday to close at 3,009.05, with the index financial sector sinking by 4.3% and the energy sector by 3.5% lower. All 11 sectors of the S&P 500 closed deep into negative territory on Friday. For the week, the broad-based index plunged by 2.8%. Meanwhile, the Dow sank by 2.8% on Friday at 25,015.5. For the week, the Dow Industrial Average notched a 3.3% decline. Still, it kicked off this trading week on a positive note after Friday's rout. A stronger than expected 44.3% jump in pending home sales for May lifted investor spirits. The numbers are a sign of a rebound in housing and potentially the overall economy, which is now in the midst of a recession due to the COVID-19 pandemic. Meantime, the tech-heavy Nasdaq Composite Index lost 2.6% to reach 9,757.22 on Friday. Week on week, the Nasdaq fell by 1.9%. Investors are bracing for more data about how the US economy is holding up. It unexpectedly added 2.5 million jobs in May, and the unemployment rate fell, although to a still high level of 13.3%. The jobs numbers will be unveiled on Thursday, since the stock market will be closed on Friday in observance of the 4th of July holiday. Among individual companies, Facebook stock sank on Friday on news about a growing advertiser boycott. Blue-chip companies like Starbucks and Levi Strauss joined Unilever, Verizon, and other companies that have decided to pull ads from the social media giant. Facebook shares fell by 8.3% on Friday to close at 216.08, posting a 9.5% decline for the week. A civil rights coalition launched the Stop Hate for Profit campaign earlier this month, calling on major corporations to halt advertising on Facebook due to its repeated failure to address the vast proliferation of hate on its platforms. In the past week, Facebook held a conference call with marketers acknowledging a trust deficit and sent multiple emails to advertisers in an effort to curb the revolt. On Friday, CEO Mark Zuckerberg pledged to ban hateful ads and label controversial posts from politicians. Meanwhile, shares of Gap were among gainers last week, as the retailer reported that it was teaming up with hip-hop star Kanye West. Gap stock surged by about 19% on Friday to close at 12.07. For the week, the retailer's shares logged a 13.2% rise. Gap has entered into a 10-year deal with rapper and fashion designer Kanye West to create a line of clothing. Interestingly, as a teen, West worked at a Gap store in the Chicago area. "We are excited to welcome Kanye back to the Gap family," the Gap brand global head said. You've watched Weekly Financial Review with me, Anna Kasatkina. Stay tuned.